Will Bitcoin rise again? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. The promotional event offering $100 cashback with a $100 deposit has already officially ended. The promotion has ended. The $30,030 event is still ongoing, but it requires a certain amount of trading volume. If you click on the BitGet link here, you will be taken to this page, where you can get $100 cashback with a $100 deposit. However, you need to complete KYC first. Plus, it's only available for the first 200 users. With the highest trading volume, the said top 200 users are those who use my link to register. I believe it's not a difficult goal to achieve. You can give it a shot. If you're interested in the trading competition, click the link below and be directed to this page. This is a contract trading competition held by BitGet and crypto. The prize pool is indeed very generous. Let's look at the distribution of the prize pool. Here it is. The money is distributed based on the number of participants. If the number of participants exceeds a certain threshold, the corresponding prize pool will be distributed. For example, if there are around 500 to 700 participants, which I think it's easy to achieve, they can share a prize pool of $10,000. This is a big amount. Besides, they also offer a grand prize. For example, you could win an iPhone, an iPad, an Apple Watch, or a luxurious trip to Japan. With 3 tickets, this is a fairly generous prize. Let's return to the Bitcoin market. We'll look at the weekly chart. The weekly chart is bullish, right? There's no doubt that the weekly chart is bullish. The daily chart is bullish too. It's no problem to go long in both weekly and daily charts. However, in the smaller 4-hour time frame, a stock market correction is triggered. Look at the 4-hour time frame. It's not necessary to use any weird patterns to define it, as it's evidently a box pattern here, with clear upper and lower boundaries. The lower boundary is $27,000, and the upper boundary is around $28,700 to $28,800. In fact, the current trend is experiencing a correction after an uptrend. Look, the uptrend is followed by correction. The correction will end up in 2 possible trends. Let's draw the potential movement. 2 possible trends. As for the first outcome, there is volatility here. After the volatility, a retracement occurs, followed by a surge in price and then a pull-up. This is the first possible trend, where the pull-up happens after the retracement. The second possible trend is where the retracement happens here, followed by an instant pull-up. Basically, these are the 2 possible trends to expect. To conclude, a retracement followed by a pull-up at 2 different points is likely to happen. Why is that so? Because judging from the trend on the bigger time frame, such as daily and weekly charts, it seems that the wave hasn't been completed yet. Besides, once the trend is triggered, its momentum is very difficult to be altered, unless there's a consolidation with significant volume and term structure at the top. Otherwise, it's not likely to change the trend. However, if the consolidation period is extended, it will be no problem. With the prolonged consolidation, it can even be a more powerful and strong correction. The 2 possible trends mentioned are surely going to happen. Let's look at this. In fact, during the uptrend, corrections happen very often. Is an uptrend with correction healthier than one without? This is a question we should ask ourselves at this point of time. Let's return to the daily chart. Well, what's the trend here? The current trend is a bullish trend, followed by correction. Let's compare 2 scenarios. The first scenario is the price actions directly surge. The second scenario is the price action rises, followed by correction, and then it rises again. Which of these trends is worth taking a long position? Give me a second. Should we enter a long position at this point? I'm plotting on the same price. Or enter a long position at this point? In both trends, with the same increasing amplitude and price. Which of the points is suitable to go long? In fact, you can go long on these two cases. Because it's a bullish trend, there's no problem to go long. The most important thing in trading is to follow the trend. Actually, we can't decide on how to trade. But the market does. We can only trade according to the trend of the market. Let's look at this uptrend with a correction. I believe it's a better trend to enter than one on the left. With a correction in the trend, and then a rise in price action, this makes a better entry point. Why? Because the right side is considered healthier. We can think about it a bit. If the trend develops as the left side, many dirty chips will be accumulated during the uptrend. For example, some traders will enter long positions at this point, and this point, or they purchase spots. When the price action rises up to here, they will think that they're going to make a significant profit here. So, as the uptrend goes upward, it's very likely to drop drastically out of a sudden. Why? It's caused by the bullish profit-taking. When profit-taking prospect from long positions occurs, those traders will sell orders. They sell to close, a behavior of selling orders. So, it creates a selling power that causes the price to drop significantly. Though it's fine to go long during the uptrend, the following price actions can be highly risky. On the other hand, let's look at this uptrend. A similar operation applies to this trend too. Some traders will enter long positions at this point, and this point, or they purchase spots. When the price action reaches here, the profit-taking prospect appears. However, some traders will be washed away during the consolidation period. Their exit will clean up the chips and clear the profit-taking traders, because their positions and chips are sold. Hence, after the correction is done, the next wave of rise begins. The trend line on the right is more valuable to study. It also resonates with our current market trend. However, in the smaller time frame, like the 4-hour chart, the trend shows a signal of weakening. We notice a horizontal market movement here. As compared to the uptrend earlier before, it appears weak. Let's look at this price. This price is suitable for hedging and short selling. Open positions at this price will bring a bumper harvest at around $28,600 to $28,700. It's a great price to open a position. Some traders may open at around $29,000, which is quite difficult. But around $28,600 to $28,700 is a profitable point. Besides, the current trend is around this price too. In my operation, I'm just avoiding risk in some of my long position. I'm still going long overall. There's no problem with that. I just want to eliminate some risks that may be inside it by the potential retracement and consolidation. Eliminating these kinds of risks is the core reason for my current trading operation. Some people might confuse that I have spots and why I would hedge them with short positions or another hedging strategy. They argue that I didn't sell short. In fact, I didn't enter short positions, as it's not the direction of my trading. Some people may find it confusing, but these are completely two different concepts. Let's take options as an example. There's a trading strategy you're familiar with. Covered call strategy. For example, I want to sell Bitcoin now. Of course, I will wait for a good price. I will surely sell it at a favorable price. Let's say I'm holding the Bitcoin now, and I sell a call option before Bitcoin reaches my target price. I will keep on collecting the premium, right? I keep on collecting the premium until Bitcoin reaches my target price, and I will sell it as I planned. So, this is a different trading operation from another one. What's the other one? Let's say I don't have Bitcoin now, and I sell a call option. This is dangerous behavior, because when you don't have Bitcoin, your profit is limited, but the potential losses can be unlimited. This is a very unreasonable way of trading. So, these two strategies are completely different in trading. They are entirely different. Next, let's look at the Ethereum market. In regards to Ethereum, the current trend is facing resistance on a weekly scale. Look at this price level. Did you notice something? This is the main reason why I think its current trend is weak. Look at the resistance here, support, and resistance over these periods. It's a conflicting line here. That's similar to the price, at around 30,000 US dollars in Bitcoin's market. As you can see, the trend develops into an ascending triangle. I believe this neckline is pivotal. If the neckline could be broken through, it would be a very strong bullish signal. A very powerful one. Besides, if Ethereum grows more active than Bitcoin, you may pay attention to whether the resistance of around 1,800 US dollars to 1,900 US dollars is broken recently. Alright, thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you believe it's true, baby, won't you let the light shine through?